Guys, welcome back to XRP Insider Network, where we connect the dots between global macro moves and what it means for your XRP before the mainstream catches on. Let's get into it. If you clicked on this video, you already sensed something important was happening. And you were right, we are in a window right now where multiple price forecasts, institutional signals, and macro triggers are converging on XRP at the same time, and the mainstream financial press is almost completely silent about it. That silence is not accidental. It never is. What we're going to do today is cut through the noise, lay out what's actually being said by analysts who've been tracking this asset longer than most people have known it existed, and then give you the framework to decide what any of this means for your position. We're not here to hype. We're here to connect dots. And by the end of this video, you're going to see a picture that very few people outside this community are even close to seeing clearly. Here's the angle most people are going to miss entirely. It's not just about price targets. It's about what reaching those price targets would actually require structurally, and whether those structural conditions are already being quietly assembled right now. That's the conversation worth having. So let's start where most people finish, because that's exactly where the real insight lives. The market cap argument is the first thing skeptics throw at XRP holders. And it is the weakest argument in the room once you understand how XRP is actually priced. Here's the thing most retail investors haven't been taught. Traditional market cap logic, the kind you apply to equities, does not map cleanly onto a digital commodity. When XRP was officially classified as a digital commodity following the resolution of the SEC case, that changed the pricing framework entirely. Equities are valued on earnings multiples, revenue projections, discounted cash flows. Commodities are priced on three things: liquidity inflow, demand from real-world utility, and scarcity. XRP checks all three boxes more convincingly than almost any other digital asset in existence. The utility argument isn't theoretical anymore. Ripple has operational partnerships across multiple continents, corridors that are live and moving real value, and a legal status in the United States that gives institutional players a compliance pathway that Bitcoin and Ethereum currently cannot match with the same level of clarity. So when someone says a 4-digit XRP price implies an absurd market cap, the honest response is, you're using the wrong model. You're pricing a commodity like a stock. And that category error is costing people their conviction at exactly the wrong moment. Now here's where it gets really interesting, and this is the part I want you to stay locked in for. Multiple analysts have floated 2026 price forecasts in the range of $1,500 to $2,000 per XRP. Let's be intellectually honest about this. Reaching that range would require a total market cap for XRP somewhere in the neighborhood of $70 to $100 trillion. That is not a small number. That is larger than the current global equity market. So for those figures to materialize in a single calendar year, you would need a near simultaneous explosion of several conditions. A dramatic reduction in circulating XRP supply driven by DeFi protocols, cross-chain activity, and utility consumption, a massive rotation of institutional liquidity into the asset, and a regulatory environment that has essentially green-lit XRP as the preferred settlement layer for digitized global finance. Could all of that happen by the end of 2026? Possible. Probable? That's where honest analysts start to diverge. What is probable is that the direction of travel is correct, even if the timeline is aggressive. Regulation is coming. Liquidity is coming. Adoption is accelerating. The question is pace, not destination. And then there's the AI model data point that deserves more attention than it's getting. Alibaba's AI model, fed with years of aggregated cryptocurrency data, returned a 2026 price forecast of $7 as a baseline, with a more optimistic scenario suggesting $42 based on accelerating institutional adoption and Ripple's expanding partnership network. Now, $7 might feel underwhelming if you've been hearing 4-digit predictions, but here's how to read that number properly. An AI model trained on historical patterns is reflecting what has already happened, not what structural changes make possible going forward. It's backward-looking by nature. The $42 scenario, anchored to institutional adoption and Ripple partnerships, is the more forward-looking read, and it points in the same direction every serious analyst is pointing. up, driven by institutional demand, not retail speculation. Which brings us to the signal that institutional investors are watching more closely than any price forecasts. The BlackRock question. Here is what we know as documented fact. In November of 2023, a filing appeared for a BlackRock iShares XRP trust in Delaware. Bloomberg reported it as fake. The filing was never completed. But here is what is equally documented. Both Brad Garlinghouse, Ripple's CEO, and Larry Fink, BlackRock's CEO, have been directly asked on record about an XRP ETF. Both declined to comment. Not denied, not laughed off. Declined. In the institutional world, that specific kind of non-answer is a language. It means NDAs are in place. It means conversations are happening in rooms that are not accessible to the public. It means the infrastructure may already exist, sitting dormant, waiting for the moment that is most strategically optimal to deploy. BlackRock does not move randomly. When they launched the Bitcoin ETF, it was after years of quiet positioning. The same pattern appears to be playing out with XRP, and the difference this time is that XRP has a regulatory clarity that Bitcoin did not have when BlackRock began its Bitcoin ETF journey. When an XRP spot ETF from a firm the size of BlackRock hits the market, the FOMO-driven demand rotation will be unlike anything the XRP community has witnessed. That is not speculation. That is simply how institutional capital moves. It moves in waves, and the first wave carries everything with it. Now let me show you something most people are completely missing when they think about what to actually do with XRP if these forecasts, even a fraction of them, come true. The collateral strategy is being talked about in serious XRP communities, and it deserves a clear-eyed explanation here. The core idea is this. Rather than selling XRP back into fiat during a major price appreciation event, holders use their XRP as collateral to take out loans, deploy that liquidity into cash-flowing assets like real estate, generate monthly returns, pay back the loans, and retain their XRP position throughout. This strategy only makes sense if you believe XRP's long-term utility as a settlement asset makes it more valuable to hold than to liquidate. And the argument for that belief is not emotional, it's structural. If XRP becomes the primary liquidity bridge in a digitized global clearing system, then holding XRP is not like holding a speculative asset waiting for an exit. It is like holding a toll booth on the busiest financial highway ever constructed. You do not sell the toll booth. You borrow against it and let traffic pay you back. What does all of this add up to? Here is the honest synthesis. Short-term price targets ranging from $7 to $2,000 by end of 2026 tell you less about XRP's actual trajectory than the structural forces assembling beneath the surface. Legal clarity has arrived. Institutional attention is documented and growing. The ETF pathway is open. Real-world utility is live and expanding. The macro environment, with liquidity beginning to rotate back into risk assets as rate cycles shift, provides the external fuel. The conditions that would make even the more conservative forecasts in this conversation look prescient are being laid right now quietly by the institutions that move markets before retail ever hears about it. You are not late. You are exactly where the smart money was on Bitcoin in 2016, on gold in 1999. Positioned before the crowd, holding an asset with more institutional infrastructure being quietly built around it than at any prior point in its existence. The people who understand what XRP actually is, not a speculative token, but the settlement layer for a digitized global financial system, are not watching daily price charts. They are watching regulatory filings, ETF applications, central bank digital currency frameworks, and Ripple partnership announcements. They are connecting the dots that the mainstream will only connect in hindsight, years from now, when they look back and say they should have seen it coming. You already see it coming. That is why you are here. Stay patient. Stay positioned. The infrastructure does not lie. Mike out.